why this is saying March 16th is on. That was yesterday's analysis, but it should have already updated to reflect today's date, March 17th, but it's not. But you can see our resistance on the euro was 782, but we expect to see some pushback, and the high was 783. Now, like I said, going into today, I was looking for a key number more towards 792 right now for today. Just a moment. So let's go and take a look here at the euro. Not sure why this date did not update. It says today. There we go. Usually that updates automatically. I'm not sure what happened there. But so let's go on and get started here on the euro. To me, the key level, obviously, we're backing away. Like I said, one of the concerns was I was trying to tell people about this. Hey, you got to be careful with these Friday flows. Anybody that tried to come in and short the euro yesterday, they're underwater. So looking for any dips right now, some good support on a very, very short-term basis would come in right in here, this 724 area here. People look to try and cover, or if they got short up in here, would look for any dips in here to go on and cover. But to me, the key level here is this 792. And I think that overall, we talked about a move low for the dollar. Not like the dollar's going to turn around and fall completely apart, but a pretty decent correction. A lot of people are saying, well, I can't wait to buy the dollar. Then that's fine, but I'm saying is I think we're going to get a little bit more extended move. And I think that the key today is on a daily close is that if we can close above 762, that's going to really open the door for this market to move higher. But I think that eventually we'll be able to come to the top of the zone, which is 859, which will take out the prior highs, we challenge the old highs here. So looking forward, looking outward for today, we actually almost made it to 792. Our resistance on the bias chart was 782. But I think today, if this area is going to hold, then the next key level would be right here, which would be 815. Now today, like I said, it's a 792. If we were to get it in a weaker University of Michigan, that'll obviously put some pressure. But I think that, like I said, and that would, if we get above these highs, we already have this 792, but we'll, for going forward to go into next week, it's going to be this 815. We're going to mark that off. Obviously, like I said, on a short-term basis, this has turned bullish. And we've updated that to reflect that. Now, for support, and we've already flipped well into a buy signal. When you look at the 30-minute, we'll take a look at that. There was also another area, and I'm pointing out to some people this morning. $784 reflected the 161% extension of this most recent range here. Point that out here. See that right there? And that's what so you had the 758 being the 78% of the most recent move range, and then the 784. Obviously, we got above that. We were talking about yesterday, 782 being a good key level. I was looking today for 792 because I thought we could even squeeze even a little bit higher. But I thought on that first run up, you'd probably see a little bit of a pushback. We did see some pushback, but not from there, but from the 783, which I had 782 marked up. We did see some pushback. We tried to get them up here, and then when they rolled over, then we were able to go and hit the stops. But this 784 is 161% of this most recent range. You can see that here. So some good confluence of resistance that we were looking at. And obviously we got the buy signal right in here. Support's going to come back to this old 714, probably push it a little bit lower. So on a short-term basis, because we are in a buy mode, it's going to be right here at this 705. So we're going and keep it pretty tight. And Amanda says, good morning, Paul, TGIF. You too, Amanda. Amanda's a long, long time listener from the European crossover days, and excellent trader. So let's go and mark this off for 705 on the short basis, on a short-term basis, I should say. And as mentioned, we're clearly bullish in the euro and expecting, further up move, which we were looking for a dollar correction afterwards. I think that this market can get a little, like I said, now Novotny was saying, hey, they could possibly start to normalize policy before they even finish their bond purchasing program. So that really opens the door at this point for us to go, for us to get even stretch them higher. What you have to do is you have to look at this because the FOMC is a big, huge event because of the expectations that were going in there. Hey, are they going to make it 4 rate hikes? Is the rate going to be hawkish? Are they going to talk about the balance sheet? A lot of things. And so there were a lot of people that were waiting, they're going to wait till once we got past that to make a determination as to what direction. So it's a move that would extend. It's not a move that would play out for 2 or 3 days and boom, that's it. Now you may see that, like I said, we saw it would come up here and then you see the market rest. But this market, I don't believe it's going to turn around and just end up giving it all back and then we floundered here. I think that, people that are holding for the longer, bigger moves, they're not going to go in and jump out of their positions. They're going to be wiggled out of their positions until we get much higher, probably closer to 9. So any pullbacks, those are going to be defended, and I think we're ultimately going to end up working higher on this thing. So you have to be cognizant of that and then approach it. And if you try and short it, it has to be from very key resistance levels and hopefully with the confluence of a fib, which, like I said, if you were trying to, you have to be careful, coming in Friday, if there were people that were caught on the wrong side, but we talked about that 782 for those people that were definitely wanted to be bearish to euro, and then you had this confluence right here with the 161% of this recent range, gave you something extra. You see what I'm saying? And then you can see on the Friday on the 5 minutes starting to weaken. Let's get ready for the webinar. So I haven't done anything with this. Well, let's go and get back. I try to play it cautious on a Friday, especially where I think some people may have just gotten a little bit happy trying to grab onto those shorts yesterday in the 720 area, and then they find themselves, 60 pips underwater, and then they're trying to find any kind of a dip to buy them out and not wanting to be short over the weekend. So I think it opens the door for us to go, higher, obviously, in the euro. Let's go and move into the cable. Now the cable, we got this move up to 23.37 and that confluence with the 23.38. I was happy to stay with that area here, and then we saw the market kind of pull back from that area. But one of the things that we pointed out is this market is so oversold because not only did we make this move down here, but also we languished here for a while. So any short covering could really spark a little bit of a move. And I'm be honest, in some ways, I'm surprised it didn't try and go crazy and really rally like we saw in this move here. But people getting more concerned about how far how, that they feel that you're starting to see an impact in this British data. So, and a lot others stating, hey, they'll use any rally to go on and get short. But we still made, like I said, we came up here, we talked about this 2362, and I think we talked about, it might have been right here. I think we said 2387 for a stretch. And yeah, that was it right there. It might have been 2389. But anyway, we got up in here for a stretch. But we knew this thing could push a little bit higher. Obviously, we're working a little bit lower at this point. So for resistance, if we were to try and maybe make another push higher, I really don't see it, but would come in right here, which would be 2419. I'll mark this off here. This is still going to have to remain bearish. Even though we come up, we can't say it's in a range until we start to hold into this area here. So let's go on and take a look where support's going to be. Support will be right there, 2242. Still about 100 pips away. One of the things we do try and do on Fridays is we try and look how everything's played out. Obviously, we had a big, huge event this week with the FOMC that kind of like gives us a new direction. You're seeing that here with the euro. And then we try and kind of get an idea of not only what happened this week, how that played out, but also what are we looking for the week ahead. And my guess is that with the cable, obviously, I think we would pull back and try and do a little bit of back and filling here, and then we'll see. Do the longer term bears, do they win this outright in the sense that they start to reassert themselves lower? That we're just going to have to go on and see. I don't know, but I think they're more likely to come back and fade a little bit and spend some time here. If you're looking for initial support, day trade, this thing is going to come here, this 2282 area here. And run in here, 23 even. I think they'll ultimately spend the week trying to pull back a little bit, find some support, and they may try and stretch the bears a little bit. And they stretch them to push a little bit higher. So let's go and move into the Aussie dollar. And we had 77.31, which I don't think that changes at all. And let's look at the support, 76.39, which is probably going to stay the same here. Right here, this area. The resistance is going to remain the same. I think we had gotten up as high as, what was it, 77.40 or 77.42, something like that. Gold's starting to perk up a little bit here. We're at 12.30. As I mentioned, where gold is the one market that really got slammed and got hurt the most. We'll just take a quick view because that's the one market that seems to be moving a little bit here. We do have bonds on their highs, which is aiding the gold. You can see here gold trying to perk up. And you can see here we just haven't seen much of a pullback in gold. And I think the reason is because gold's the one market that's really just got whacked with the higher U.S. yields. We talked about over the last 2 weeks how the euro had positively diverged from the dollar strength that we were seeing, cash dollar index strength. Obviously, gold's getting a little bit of a benefit this morning when we look at our interrelationships. is getting a nice little benefit from this move we're seeing here in the bonds. So working a little bit higher. This whole area down here is 47.12 held. Actually, I think the low is 47.14, but I was looking at the 12. So we're pushing higher. That's going to open the door for them to, if they like, and which they did yesterday, push them higher in the gold market. But I just want to go on and touch on that quickly. We'll get back into the currencies, back into the Aussie. If the market's moving, we'll try and take a look into that. Obviously, what's happening with gold. The Aussie is going to still stay the same. The top of this range here, the 77.31, you can see how key that is. It's going to stay the same here, the 77.31 for resistance, and we're going to stick with the 76.39 for support. So nothing changes there on the Aussie. Right here. And we're going to say it's a range. We're starting to work a little bit higher. Until we break out of this, I don't want to say we're all of a sudden bullish. We'll get a nice rebound, but that's based on the dollar coming off with the decision with the FOMC and the rhetoric not being as hawkish. Let's go and move into the Kiwi. So on the Kiwi, we had 69.39 and 70.64. Let's take a look at what we had stand there. This would almost look like a little bit of a cup and handle almost. I'm not much of a cup and handle aficionado, but I'm just saying it looks like that. I think we did that once before. I think it was a Kiwi also sometime back and ended up projecting onto that area. If so, we're going. I'm not very good at this cup and handle. I don't really look at those type of patterns, but that worked once before for us. I think it was the Kiwi. It was either that or the Aussie. I don't remember which one. So that would suggest 72. We'll find out. Maybe if that eventually matriculates. But anyway, for right now, we're going to look at the resistance and resistance here. I think we already had that. Yeah, 70, 64. I think we had 70, 69. Oh, 70, 64. Okay, great. There we go. And support 69.39. Yeah. So I think that's going to remain the same too here on the Kiwi, although it is very bearish. But if the dollar goes through a little bit of an extended correction, then we have a target that we'd be looking at. And the bias pivot here would be at 72.35. So let's move into the dollar CAD. Now we did see the Canadian strengthen off of the, as I mentioned, obviously everyone knows that the FOMC was not bearish whatsoever. Bearish for the currencies, or i.e. bullish for the dollar. And that opened the door for the Canadian currency to strengthen. Obviously, this is the inverse relationship, so we lost here the dollar versus the CAD. And we came into this 38% that we had marked out. We even overshot a little bit, and we've stabilized at this area here. Resistance on this, if the dollar is going to go in and open itself up for a little bit lower move. Now, here's what's going to go in and slow that down a bit is obviously we've got crude oil prices that remain weak. We're looking at the article. It says that Asia is awash in crude oil, which suggests that, like I said, that may have to go lower before we can, stabilize here in the crude, which would open the door for the dollar CAD to move even a little bit higher. So if that's the case, I think right here is where we would start to see some good resistance, which would be 33.96. This has still got to be considered bullish until we start to break lower from here. Even if it's on a short-term basis, we're seeing gold right now at 1231. Bonds on their highs at 4804. So it's aiding and abetting this move up here in the gold, which responded positively yesterday, if you remember correctly, to the bond move higher. If we come here and start to roll back, we can say we're going to a range, but just this quick dip off of that key news, I don't think you can say, okay, now that flips it now to range. It has to stay bullish until it can prove that it can't get beyond this 3409. I don't expect it to, but I'm saying it's got to prove itself before we flip it now to the range. Support from this area, we had the 3250. I think I'm going to go on and stay with this 3250 for support right now. It's some good solid area here. We'll keep that right now, which is still being 80 pips away. So we're going to go on and keep this here, the 3250. And we're going to go and take a break. And thanks for joining us here on the Morning Edge webinar. We don't have any, as I mentioned, any U.S. data until we get to industrial production, which is at 9:15 Eastern. And then we have a preliminary University of Michigan, which is Reuters poll is going to be 97, a little bit stronger. At 10 a.m. Eastern, we do have Canadian manufacturing sales at the bottom of the hour, but not any U.S. data. But we'll take our break, and thanks for joining us here on the Morning Edge webinar.